Okay, so this is the results of year five, and we see that teams did pretty well earning points this round, and profit margins have gone up. Most people are in the 60% or higher range. If you're below 60%, you need to increase those profit margins. Generally, what I see going into the sixth round is people are able to produce 70% and higher on their gross profit margins. So some teams are still playing catch up on their gross profit margins, and this is what running investors look for in a company, that they're able to increase and grow their profit margins, their stock price, their sales, and their total profits. Now, I've given, there's not much more advice I can give you that I haven't given you in the four previous rounds, but you have to, if you're going to raise profit margins, you have to reduce costs and raise prices. And sometimes you may have to sacrifice some sales to meet the margins you want. And you just, some companies can waste a lot of money over advertising and, undercutting the price. But that, at the end of the day, that doesn't make a more profitable company most of the time. Uh, let's see here. So if we look at total points, you can see that it's sort of a lot of teams are only a couple hundred points away from the 3,000, and some teams are a little bit further behind, but can certainly catch up in the last round. Um, and overall, the class is doing very well in the performance of the simulation, which is what I would expect from a graduate level class uh, competing in this simulation. And you can see that there's definitely an upward trend in profits. So that makes sense because people have been following my advice. They've been making their cars more profitable. The market is expanding at double-digit percentages, so you would expect to see um, profits going up. And we can see we had a general rebounding of points in year five, and I'm hoping to see that after a downward trend in points. I'm hoping to see that rebounding in 5 and 6. And generally, you do have a rebounding in 5 and 6 because by this point, most of your operational investments are made, and you can start reaping in those much higher profit margins due to those operational investments. And you can see here that we had, as far as stock price, we have three teams really at the top point of stock price. Jim Boss, uh, Wong Cars Go, and Stern Auto are all in the top stock price, which is excellent. And we have, looks like we have a new leader of sales, A&B Autos, a new leader in sales, and we have Stern and Kayla Motors as the top three in sales. And sales are important, but they're only good if you have high profit margins. And we can see earnings per share. We had, in the past, Stern was the top earnings per share, but now we have Jim Boss and Wong Cars Go in, the top spot. So they really had overtaken Stern by surprise here, and we had a big change in earnings per share for many teams here, which is a good thing. And you could see. Let's just go back up here, and you could see that a Jim Boss had and Wong Cars Go both did very well in this last round as points, as they were able to increase their profits, move up their sales, move up their profit margins, and their points are reflected in that. Um, so we can see the gross profit margins here. Now, this company had lower score and position last round. That was a building round for them, and once they had got their operational investments in place, they're able to really increase those profit margins to get to the top of all the charts on many of the areas. So total points, things are looking good for a lot of teams. Companies have performed well, but you want to still maintain your focus, and you still want to proceed and complete by Thursday night round 6 to get your final score and get your remaining few points. Now, if you're a company that didn't do as well if you hoped, this is really a research round for you. You need to go into the industry page, see what the other companies have been doing, how they've been creating their cars, how how much operational investments have they had, and try to, get some ideas from how the top companies of this class have really performed. and try to apply them. Be careful not to get any surprise deficits. Make sure you have enough cash in your surplus. I recommend $20 million or more in your surplus just to guard against, because remember, if you get a deficit, you don't just lose 100 points, you really lose 200, because if you had a surplus, you would have made 100 points. So with a deficit, you lose the 100 points you would have made, and you get a deduction of a negative 100. So it's a full 200 point changeover in your score. So be careful of those deficits. And you can get these unexpected deficits if you over forecast and don't sell all the cars that you had forecasted. So if you're going to be aggressive on your forecast, make sure that you backed it up with a large surplus to cover the fact that some cars may not be sold if you overly aggressively forecasted or if you under marketed. Okay, so that's really the only advice I have for you for this round. We're getting to the end of the class. We only have a couple days left. Don't forget, you have your final exam to work on. There's a remaining case study on Whole Foods, and you have the last round of the Zoom simulation in addition to the discussion board. So still a lot to do with this class. I wish everyone the best of luck. It's been a great time so far, and I'll talk to you again soon.